In Chapter 2, I'm looking at Table 2.4 in the new textbook, and this is the 2012 personal tax schedule. Now, this changes from year to year, so what we're going to use, though, is the 2012 one in the particular of this class and all the homework that we have. Now, if you are single, the way that we determine your taxes is we'd look at your taxable income. That's all your money. That's your money after deductions. And if your taxable income is between $0 and $8,700, you are at the tax rate, that's TR, of 10%. These are real numbers, and if you get 8,700 to 35,350, your tax rate is 15%. And then if it's between 35,350 to 86,650, you're at 25%. And then if you are at, sorry, that's an 85,650, and it's your 85,650 here to 178,650, you're at 28%. Then another tax bracket's 178,650 to 388,350, and that's 33%. And anything over 388,350 is 35%. So this is the progressive tax system that we have in the United States. Now this is for the single. Now married is a little differently. There's a little different category, and let me just show you what that category would look like, and we'll work with that a little later. On the married, so if you were married, over here, it would be 0 to 17,400, and the tax rate would be 10%. Just a little different. It's just double that as we move forward. But we have a married, and then we have a single. But today we're going to work with a single one here. All right. So what you have is you have a person who is going to earn money. So for instance, if you had John, who earns $8,500, that's his taxable income. He may earn more than that, but his taxable income is $8,500. Well, he would have to pay, by our bracketed system, since he's between 0 and 8,700, he would have to pay 10 cents on every dollar that he earned in that category that's taxable. So the way that we do the calculation would be 8,500 times 10%, or 10 cents for every dollar, and he would have to pay $850 in tax. Okay, so Mark, he makes, say, $10,000 in taxable income. Well, he's going to be in the second tax bracket. So let me show you why. Well, the way the system works is that we look at 10,000, and 10,000 falls in between here and here, between 8,700 and 35. So it falls within this category. So if I could call this 1, 2, 3, 4, 5, 6. So he's in the second category, or the 15% bracket. So what we would do is we would take the 10,000, and we know that he is here, 0 between 87. So he makes $8,700. So what I do is I take 10,000 minus 8,700, because that's the top of that category, and I know that leaves me with $2,300 left. Okay, so now I go 8,700 to 10,000. Okay, because now 8,700. Now the far end on this bracket is 35,350, but we stop at 10. So in this category, I can only tax $2,300 at 15%. I can tax the full 8,700 at 10%. So the way the calculation would work is 8,700, this is from category number 1, times 0.10 would be $870. Then the next category, from category 2, would be 2,300, which is the difference between here and what he made, the 87 and what he made. So there's $2,300 at 15%. So what we'll pull up the quick calculator here, and we'll take that out and say 2,300 times 0.15 is equal to $345. So quick addition is that Mark, who makes $10,000 in taxable income, will have to pay $1,215 in tax. So let me just recap that. On the first $8,700, he pays 10 cents. Then on the second, then as he goes to the second bracket, the difference between the top, the 10,000, and the 8,700 within the bracket. So let me go here. Let me show you this. So here's the brackets. So $8,700. He makes 10,000. We're going to tax 2,300 of that, because that's how much we can tax, at 15%. So the first 8,700 at 10 cents is $870, and then every dollar thereafter, up until the top of the bracket, is at 15 cents, and that's $345 that we're going to tax. So his total taxable income is $1,215. Now his percentage of tax that he has to pay is the $1,215, and we're going to divide that by what he started with. It's 10,000. So Mark's, if we were to add this in, and what I'm doing is I'm just doing a quick division here. In Mark, his tax rate is 12.15%. One more problem. Sam makes $36,000 in taxable income. Okay, in the first bracket, which was 0 to 8,700, we are going to tax $8,700 worth at 10 cents a piece, or $870. And on the second line, because we're in that category, so we're here to show you this. Here's the categories. So we could fully complete this category, and we're going to end up on the third. So what I'm going to do is I'm going to take the $35,350, and I'm going to subtract $8,700 from that. Let me get my number. Let me show you why. And just give me a second here. I'm calculating. Okay, so in this category is $26,650 of taxable money. So from here to here is the next is $26,650. So since he went through that category, we're going to charge that entire amount, $26,650, at 15 cents. $26,650 times 15 cents. And that is, if I'm going to round up, is 3,998. That's for that category. You're going to spend $3,998 in taxes. Now, so Sam makes $36,000. So the next category is this. It's $35,350 to $85,650. Now he only went to $36,000, so it's $35,350 to $36,000. So the way I do this is I take the $36,000 and I subtract $35,350, which should be about $4,650 if I'm doing my numbers right. Let me just double check here. $35,350 is $4,650. Okay, so in this category, we're going to tax $4,650 times, here it is, 25 cents for every dollar in that category. If you just saw what I did is I pulled back so I could see what this is. This is also in your textbook. So 4650, 4650 times 0.25 is equal to 1163 if I round up. So basically what we do at this point is we add these numbers, 870 plus 3998 plus 1163. So the taxable income was 36,000. His total tax is 6,031. To get the average tax, 6031 divided by 36,000. What you pay over what you started with. I'm just calculating it here, and he is paying 16.8% in taxes. This is the basic equation for the personal tax schedule. If you have any questions, please let me know. Thank you, and this will help you with your next problem.